What is going on YouTube, and we are back with another one. Alright guys, so in this drop I'm coming at you with a couple of plays to pick up next week in the markets. Now before I get this show on the road, if you're looking to change your future financially using the stock market, do consider hitting that subscribe button and joining the movement. And if you're already locked into the channel and you know someone, whether a family or friend who could do with earning extra money using the market, do put them on the channel. To kick things off, I want to show you guys the S&P 500 after Friday's close. So as you can see, crossed over 4,000. That's an all-time high for the index. So this is big things. And as I say to you guys, regardless of what the market's doing, what cycle we're in, there's always going to be winning opportunities. And I expect the S&P 500 to continue its momentum going forward. It's not just me who says that. Check this out. Goldman Sachs forecasting 4,300 for the S&P 500 in the short term. Now, I know this market sell-off we've just been through, it's got a lot of you guys reconfiguring your portfolios, adjusting your investment strategy, moving away from some of these penny stock plays into more serious investments. So I've got you on this. So I'm going to need all of you guys to grab at least one S&P 500 play, add them to the portfolio, because it will climb through the 4,000s, into the 5,000s, into the 6,000s. So I don't want any of you guys missing out on a great opportunity to build wealth with these kind of plays. Now I've got one play in particular that might not be so obvious that I want to put on your radar to help you and guide you on your way. You guys know when it comes to the stock market, we cover all bases around here, and we are switching things off to kick things off in this video. But then we're moving back into our speciality, and that's our growth plays. All right guys, you know what time it is. Let's get ready for our first one. So we've got Walgreens, ticker symbol WBA. Now this is a play that's going to benefit from several headwinds as we move forward. You guys know as investors, it's all about thinking ahead and positioning ourselves into these plays. Now, as the economy moves into reopening mode, this one is going to experience a spike in footfall, driving up their revenues. We also know they're investing heavy into their online infrastructure to ensure that competitors like Amazon don't encroach on their business. Now, I like the mindset of the management behind this one as well. I know they're out there looking for those acquisitions to grow and scale their business. Also, they are contributing heavy to the vaccine rollout, and that's going to benefit this play from a financial point of view. Now, you guys know I like those plays that increase their financial guidance. That is, they say they're going to achieve higher revenues, higher growth rates than previously expected. Now, this is a play that expects to grow high single digit compared to low single digit as previously forecast. So it shows that they're in growth mode, and this is the kind of plays I like to add to the portfolios, because those are the ones that you can see that stock price increase. Now, looking at stock price, currently standing at $54. Guys, I'm comfortable with you guys starting a position at this level. You guys always ask me, should you set stop limits, where and how? This is a play you don't need to set your stop limit on. This is one of those plays you add to the portfolio, you hold, and you watch them climb. So we're switching it up with this one. We've got BCRX, ticker symbol BCRX, currently standing at $9.97. Now this is a biopharma play. Guys, they have their Holiday product, which is out there in the market selling. They already received FDA approval in the US and in Japan, and they're waiting on EU approval, which can act as a good catalyst to push that stock price up. Now, if we just look at the charts, we can see that this one has cooled off over the last couple of days, guys. But don't look at this pullback as a negative. Look at it as a way to get into this play, get a good entry before the next run up in that stock price. Now the product that they've got out there in the market, that Holiday product, has got a large addressable market, and that is set at full scale to generate them hundreds of millions in revenues. They've also got a product in pipeline that has also received some good results as well. So as I say to you guys, it's all about detaching from that short-term price movement, looking at the red as an opportunity to buy into these plays, as long as they're quality plays, quality products, backed by strong management, and have a healthy balance sheet attached to them. So this is a play that I want you guys to consider entering into next week. We've got a price target on this one of $15. So again, big upside on the current stock price. You guys have to just keep weathering this storm in the market when it comes to these growth plays and utilizing the opportunities that are given to you. Our next play, we've got DermTech, ticker symbol DMTK. Now, this is a skin cancer detection company that just does it differently from the rest of the competition. So I'm gonna make sure this one is still on your radar. So check me out, currently standing at $51.62. You guys know we've got our entry price of below $50 on this play. That's a good time to make a position in this one. So as you can see, this one's been dipping in and out of our entry price over the week and over the last couple of days. And this is a good sign, because when we see some more stability in the market, when we see some strength In that growth market, you can see this one continuous climb and break through those resistance boundaries. So as I say, if you catch this one under $50, do ensure that you make entry on this one. All right, so those are some of the plays I wanted to highlight for you guys and bring to your attention for next week, so you guys kick off a fresh brand new week in the market at the top of your game. Let's talk about how we can level up as investors. Now, I want to talk to you guys about dry powder. This is cash reserves that you have, liquid cash, readily available that you can use to deploy into the market at any given time to make the most of the current situation. Now, I know a lot of you guys towards the end of last month, you completely wiped out your dry powder. As I always say to you guys, ensure that you always have dry powder on deck, ready to deploy into the market, because there's going to be opportunities that arise right throughout the month, and you want to make sure that you're always ready. As investors, we always want to stay ready. Now, I know a lot of you guys have reached out to me and said you've just been paid. So you guys need to strategize that money as you move forward for the rest of the month. So ensure that when you're grabbing these plays, you don't go all in, you nibble at these plays, as we say. So you grab a couple of shares each time to ensure that you can manage your money throughout the month and you never run low. It's super important, guys. So just want to give you guys the heads up for those of you who've received your salaries over the last couple of days. All right, guys, we're rocking with the channel. You know what time it is. Last question comes from Craig, says, Sankey, are you still in NEO? Now, this is a great question, so thank you for sending it in, and let's get right to it. So my stance on NEO remains the same as it did over the last couple of months. This is still a great growth play despite the volatility and what's going on with that stock price at the moment. Let me break it down for you guys. You've got to think NEO's got a fantastic brand down in China, and they're going to continue to make sales as we move forward. Now, talking about sales, EV sales are going to continue to climb as we see that shift. I call it a monumental shift from gas vehicles over to electric. They've also got their battery as a service, their technology is very good, and their management, they are visionaries that are looking to take this business forward. Now, the only thing that's changed with NEO from my side is the length of time it's going to take for them to hit certain numbers, given the current market situation and given the semiconductor shortage. But guys, with the stock market, sometimes unexpected events do arise and hit these plays and catch them off guard. But got to think, with a solid play like NEO, they are going to get to that checkpoint, that finish line. They're just going to take a different route, a different course. As investors, we just got to stay patient and hold through the volatility to gain maximum benefit from the play. Now, the strategy with this one is, if my portfolio concentration permits, I'll continue to dollar cost average into this play. You guys know I've taught you about portfolio concentration, ensuring that not any one play takes up too much room within your portfolios. I don't like any place to take up more than 10% of a portfolio. So if I have room, like I say, and I suggest you guys look through your portfolios and do the same, then do dollar cost average into this one, because they are currently in the buy zone. Now, this is a play that once they get momentum, they are going to catch a lot of people off guard when that stock price continues this climb. Now, I'm going to leave you guys with this. These are the type of plays you never want to turn your back to. You've done the diligence on them. You've vetted the company through and through. All you guys got to do is just weather the storm and you will come out on top. Alright guys, that wraps things up. Do hit the like button for me. And if you're new, do join the journey by hitting that subscribe button. And I'll catch you in the next one.